Welcome to today's training, where I show you how to save tens of thousands, if not hundreds of thousands of dollars in taxes. Most real estate professionals understand that taxes are the number one profit killer once all transactions have been completed. Because of that, we will do is walk through ideal tax structures that any U.S. real estate professional must use in order to reduce taxes by tens of thousands of dollars. What we're going to cover is why most real estate professionals are overpaying in taxes by tens of thousands of dollars. We'll talk about why tax attorneys and CPAs are teaching real estate professionals the wrong methods and tactics and have been for years. So who is this training for? Well, this training is for anyone who is a real estate professional in the United States and wants to make sure they have the most effective tax strategy for their business. It's also for anyone who wants to save tens of thousands of dollars in taxes every year. Before we get into the training, the question you probably have right now is why you should listen to me. To be fair, it's a good question. My name is Kevin Noles. I've been an accountant for more than 20 years, and I'm also an enrolled agent. I'm also the accountant for the New Digs real estate coaching team, which means I'm constantly in touch with real estate professionals, and I own a highly profitable tax firm called WinnCove Consulting. Enrolled agents are required to demonstrate their competency to the IRS in all areas of taxation, representation, and ethics before they are awarded unlimited representation rights to represent taxpayers before the IRS, unlike attorneys and CPAs who are state licensed and who may or may not choose to specialize in taxes. All enrolled agents are specialized in taxation. So how can you save tens of thousands of dollars or more without increasing your legal investment risk? Well, the big problem is that real estate professionals are too focused on the things that they think matter most, such as location of the property, tax, previous sales price, marketing conditions, rents, the list goes on. And I'm not saying that these things are unimportant. They are important. But if you're watching this training, I'm assuming that you've already got that covered. So once you've got the right investments, the biggest risk is tax. You see, 93% of real estate businesses currently pay $11,000 or more in taxes each year that they should not be. Talking about profit killers, the sad truth is the chances are your CPA is busy 50 to 60 hours a week, even more during tax season, doing audits. They're helping other clients, negotiating deals, and a billion other things than helping you, their clients, save money and explain the financial situation of your business. This means that real estate professionals such as yourself don't spend a single hour on tax planning until the deal is almost over. And at that point, it's a bit too late. So yes, keep doing what you're doing best, but you should allocate a sizable portion of your time to finding the most ideal tax strategy. But if you haven't worked with someone on tax planning, especially one focused on real estate, you might have one or two of these components, but I can pretty much guarantee that you're leaving tens, if not hundreds of thousands of dollars on the table. Let's get into some proper tax planning, shall we? Really, there are 7 components to properly planning for tax savings or tax eliminations. The first one, in no particular order, is legal entity structuring. Has an efficient tax structure been designed with the intention of minimizing tax liability? Maximization of deductions. Have all legitimate deductions been considered, including obscure deductions in the tax code? Revenue stream separation for tax efficiency. If multiple revenue streams exist or can exist, have they been separated for maximum tax reduction? 1031 exchanges. Are there appreciated or underperforming properties that can be traded out for higher performing ones with no tax impact? Tax deferment for decades. Does the transaction quality qualify for deferment? Trusts. Do long-term strategies and wealth preservation goals align with advantages of a trust? Capital gains, planning, and tax strategies. Are we taking an intentional, designed approach to exit strategies? Without really having worked with someone on tax planning, you might have had one or two of these components, but I could pretty much guarantee you're leaving tens, if not hundreds of thousands of dollars on the table. So realistically, you have 2 choices at this point. The first one is go at it alone, spend thousands, if not tens of thousands of dollars trying to figure all this stuff out, get frustrated, and waste literally years of your life. The second option is to learn the proven systems from someone who has helped real estate professionals in your exact same situation, making the exact same transformation that you want to make. You want to start working your tax planning as soon as possible. Each day you wait is money lost. On top of that, we want to audit-proof your tax deductions in order that when the IRS does call, we have our ducks in a row and you get to keep the tens of thousands of dollars I have saved you. Now, if we decide to work together, what does this process look like? So this is really for anyone that wants to save a few $100,000 up to multi-million dollars and wants to reduce their tax liability. People who are motivated to put in place processes that will reduce their tax liability. As you see, there's only a select few. So this is not for anyone who is just dabbling in real estate or just getting started. It's also not for anybody who think their tax attorneys or CPA know everything, even though, as I've pointed out, they are being taken advantage of. Are you open-minded? If not, I really can't help you. I also can't help anyone who isn't profiting or planning to profit at least hundreds of thousands of dollars per year on their projects. So the next step is click the button below and schedule a private strategy session with me. And once you do that, you will be able to get in touch with me and move on. And like I said, we want to get these processes implemented before the IRS calls. I look forward to hearing from you about your business and hopefully working with you in the future.